Hello traders, I thought I'd do an educational video today. One of the most frequently asked questions that I get is, Pete, how do I know when to buy? I'm not going to talk about shorting the market. Professional traders, seasoned traders, they know how to buy, they know how to short, they're comfortable with doing both. Most novice and intermediate traders, almost all of their trades tend to be on the long side. So that's why I'm going to focus on how do I know when to buy? The one thing that you should consider is what your time horizon is. That needs to match the type of strategy that you're using. If I'm assuming that we're just talking about swing trading stock, well, how long are you going to be swing trading it for? Are you swing trading it for a couple of months? Are you swing trading it for a few days? Are you day trading it? All the technical analysis and all the different variables that I'm going to be showing you apply to any one of those time horizons. But the one thing that's a little bit different is the time frame that you use to measure those key characteristics. The first thing that you have to do is you have to look at the market. And you'll notice that on every single one of my videos, in the background, tucked behind the primary chart, is a chart of the S&P 500. Never, ever, ever take your eye off of the market. Before you even turn your software program on, you should be reading what the market's been doing overnight. You should conduct technical analysis on the market. You don't go outside when you're going to be gone for a day or a few days without knowing what the weather's going to be like. That's why you have to get your market bearings. Is it going to be rainy outside? Is it winter outside? Is there a snowstorm possible? Is it going to be bright and sunny and really hot? The answer to all those questions is going to determine how you gear yourself up for your days outside. The same thing is true for a trade. What in the heck is the market doing? Is it smooth sailing ahead? Are there some dark storm clouds on the horizon? They are going to impact the entry for my trades and the exits for my trades. I'm not going to address exits in this video. I will do it in the future. So if I take a look at what the market is doing, and we can go back to a number of different points in time. In fact, let's go back to the beginning of the year so that we can get a really nice broad perspective. This was the tail end of the huge market decline that we had last year, the biggest market decline that we've had since the Great Depression. It was all virus related. Well, we started to get a nice bounce off of that. We had one nice little rally. Typically, there are big aftershocks after a drop like that. Here's your second test, and now we have a higher low. If I had gone back to the top of that formation and drawn a downward sloping trend line, I would see that yes, now I have a low and I have a higher low and I have a breakout right here through that downward sloping trend line. Hey, things look pretty good here. So I also have an upward sloping trend line now because I have two data points that I can connect. So where would I stop my trade out? You would draw an upward sloping trend line like that. That would be a natural stop. You could also draw a horizontal line here. Hey, the market had a nice bounce, but if it comes back and breaks below this support here, I want to be out because it'll probably check that support. So it's very, very critical that you do your technical analysis. So in this particular instance, yes, everything looks good. Now the market's starting to rally up. You can see it has a little bit of a dip here. Not a problem. This is just another support level, but everything still looks pretty good in here. Uh-oh. Well, we had a little bit of a bid check here, but that horizontal support level was still able to hold. Hey, now I have a more gradual upward sloping trend line that I can draw. You also want to put up major moving averages. Where is the market in relation to those major moving averages? And I'm going to put a few of them up here so that as we go through time, you'll be able to see where they come into play. So we're all good here, and now you have another horizontal breakout. Oh, that looks really good. This is a good entry point. You've got an upward sloping trend line here that's been breached to the upside. That's usually a sign of a buying climax, but nothing to be too worried about. Just you need to know that the market could have a little bit of a pullback, which it did in here. So use your trend lines, use your major moving averages, get your weather report, get your roadmap for the market. Here's another upward sloping channel that we identified last year, broke through the upper end of it. That's a buying climax. You see some heavy selling pressure. Whoa, now this is really pretty heavy selling pressure in here. This would be when you are taking profits on your trades. After you see something like that and you've got lots of fantastic profits in your positions, not going to talk a lot about exits. Here's a drop down to the 100-day moving average, downward sloping trend line, nice bounce. Okay, everything looks good. If this support is broken, then I need to be worried. But until then, I know that the market conditions are conducive for trading. Downward sloping trend line here, double low, higher bottom, 100-day moving average holding, downward sloping trend line. Everything's good in here. Now we get to the current day. You can see nice trading channel right up in here, and we're starting to see some signs of weakness. This is a time to go to the sidelines with your long positions. Again, I'm assuming that you're either long or you're on the sidelines. If you're a long only trader, there will be times when you need to go to cash because you don't short. Cash is a position. So in those time periods, you simply go to the sidelines and you wait for that market dip because you're going to have a better entry point. Instead of wringing your hands that we're getting this massive market drop, what am I going to do? My stocks are going down, down, down. Is this the big one? Should I be getting out? Instead of doing that kind of hand wringing, you are licking your chops. You're waiting for this storm to run its course, and you're looking at stocks that you wanted to buy a lot higher. You're watching them come in. Now they're at a deep discount. You simply need to evaluate support. And once support is established, now you can go back in, wait for those downward sloping trend lines on the market to be broken to the upside, and you know that you've got an entry point. I've been talking about swing trading. If I look at this market action in here, you're testing major support with greater frequency. You're seeing 2 or 3 red candles in a row, and they're long red candles. We haven't seen anything like that, nothing that organized back in here. That's a sign of selling pressure when you start testing support levels with greater frequency and the amplitude and duration of the bounces is shorter and shorter. You know that the selling pressure is starting to build. Go to the sidelines. Wait for your next entry point. Big volume too. So I think right now the market, if I were a long only trader, looks like I need to be on the sidelines, let those stocks come in. So let's take a look at a 5-minute chart, because if you're day trading, you have to use the same type of analysis. Long red candles closing on their low tell me that I should be favoring the short side right out of the gate. You can see a little bit of a bounce here. This is a bearish flag formation. There's your flagpole. There's your little bounce. There's your upward sloping trend line. Wham! Not a little red candle, a long red candle closing on its low. Okay, this is definitely a bearish flag formation. I would want to be short in here. Now you draw your downward sloping trend line here. Hey, this is a nice bounce. I don't know that I want to be buying it yet. Again, you're through your downward sloping trend line, but this is a key bar right here. Look, opens on the low, closes on the high, bullish engulfing pattern. It engulfs these 2 red candles, closes above the open from this red candle right here. Hey, that's a nice breakout through this downward sloping trend line. Now is the time when I want to be finding stocks that have all the characteristics that increase my odds of success. And when I talk about check boxes and finding the right stocks, this is what I mean by check boxes. For every one of these boxes that's populated, my odds of success go up. Now, I don't want to be too restrictive because then I'm not going to have any trades to look at. I won't have any stocks meeting that criteria. So I want to cast a wide net, and then I want to keep adding these variables so that I have a manageable list that I can work with, maybe 15 stocks or so. Go through each one of those stocks and see which one I might like best on a technical basis. So in this particular instance, I'm going to be looking for stocks that have strength relative to the S&P 500 on a 4-hour basis and on a daily basis. I'm going to be looking for very, very strong momentum. And because I have that marked on a daily basis, this would not just be a rebound from Friday. That would mean that the stock has been strong for at least 2, 3, 4 days. So it has weathered that market decline very, very well. I want good option liquidity and I wanted heavy volume on Friday. Okay, this is a good starting point. You can see all the stocks that come up in this list. Again, I need to be very clear on this. This is an educational video. I am not suggesting that you buy any of these stocks. I'm showing you how to find the candidates, how to know when to enter the trade, and then looking for specific clues that tell you that that stock is going to continue to move higher. So I'm going to look at some of these stocks, and I'll show you a couple of other searches that we can use. So AXP is one of the stocks that came up in the search. Hey, this actually looks like a really decent stock. Look at that breakout right there through horizontal resistance. There's a little bullish flag formation. There's your flagpole. There's your pullback, downward sloping trend line. It's through it. This stock is grinding and grinding higher when the market is declining. Okay, well, let's take a look. Hey, we've got this relative strength indicator above 0. That means that the stock has been strong relative to the market. Another way for me to see that is to put up a SPY line chart. You can see the gray line is the SPY, S&P 500 depository receipt, down, 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 down. Stock up, 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 up. Okay, this is a good stock. This is one that I want to be in. So how do I know when it's time to enter this trade? Well, again, when I see the market starting to have all sorts of problems like it's currently going through, this is not the time to get into a trade like this. You want to wait for that market condition to improve. You want to make sure that you've got some really nice, in this case, downward technical resistance has been breached to the upside. So I'm going to go back to the daily chart on the SPY. I'd want to see, because of all this choppy price action, could I try and get in early here thinking that this was a bounce? Not if you're a longer term trader. If you're a very short term trader, you can trade this bounce. I don't know that it's going to have legs on Monday or not. I would want to see it easily through this downward sloping trend line. Until I see this trend line broken, I have to assume that it's going to be repelled every time it tries to get through it. You can see how the all-time high is meeting greater and greater resistance, and these red candles are your warning sign. So no, I wouldn't be buying any stocks until that downward sloping trend line has been violated to the upside. Well, let's assume that we're not here in time. Let's assume that we're somewhere back in here. And let's go back and see if we can find some stocks that were actually strong right through here that we might have wanted to buy. So again, we got to go back in time a little bit. We have to find some stocks that we know have been very, very hot. Tesla, I know, has been hot. A lot of the EV car makers have been hot. So let's take a look at what Tesla might look like. And I'm going to remove the overlay for the SPY so that we can see it a little bit more clearly. But you can see how this stock had a really nice breakout. You can also see how you had strength relative to the market. So that's a very attractive characteristic. And here we've got a little bit of a bullish flag. There you've got the stock rallying up. You've got a little bit of a pullback. It's well above the major moving averages. You can see some tails under body. And now we've got this horizontal resistance level, 1, 2. Tried to poke through. You could have bought that. That would not be a bad entry point right there. You have a bullish hammer. The stock does retreat a little bit, but not badly at all. And if you had your stop at an upward sloping trend line, probably using something like this or even a horizontal trend line right here, stock never gave you cause to be concerned because it's got such excellent relative strength. And look what the market is doing during this time period. chop up, down. Market's not going anywhere. So now you finally get a market breakout because remember the gray line here is the S&P 500. So you get a market breakout right here through horizontal resistance and you have a stock with relative strength. Aha! This is the type of stock that's going to lead a market rally. And now that the market is through that horizontal resistance, this would be a good one to own. So that's when you would have your entry point for this. And on a breakout like that with good volume, you should be looking for the stock to lift off in the next 2, 3 bars for sure. And once you get that little bit of separation, that cushion, then it's pretty easy to put your stop right at your entry point because now there's no way you can lose money on the trade. I bought it at this price, I've got my stop at that price, and I've got a little cushion built into the stock, and you can see how it's moving higher. So that's the type of strategy that you would use when you have both the market working in your favor and the stock working in your favor. So now I am going to take a look at a current stock, but again, remember, I'm doing this under the assumption right here, right now, that the market is good for us to go in and buy. I do not feel that is the case. So let's take a look at AXP, and we'll take a look at a few of the other stocks that came up as well, and we'll see what our entry point might be on this. So we've got this nice little breakout right in here. And again, assume that the market is nice and strong. This would be a good entry point for a short-term trader. It'd be good for a day trader. It would be good for a swing trader who has a very short-term time horizon, meaning a few days, because these breakouts on heavy volume tend to have follow through. Let's see what the stock did on Friday. Remember, and let's also assume that you got long on Friday and that you were oblivious to the market. When the stock opened higher and you saw the market falling apart and the stock started to retrace, you needed to be out of this stock. Later in the day, the market recovered, and this was actually a really nice stock because you can see how strong it was through the course of the day. But the better entry point and the better market strength that we had was back in here. Here you've got a breakout, goes up here. You had earnings right in there. Stock pulls back below the 50-day moving average, recovers nicely. This is a nice little horizontal resistance level. So you've got a breakout here. Stock comes back and it tests that breakout successfully. Now you've got a nice green candle through the high. This would be an excellent entry point for that trade. Well, hey, Pete, come on. This is all hindsight. Of course, I could go back on a chart like this and see when I should be getting into a trade. The thing is that the clues were there before the stock even broke out. What clues? What are you talking about? We look for relative strength. That is our edge. We want stocks that are leading the market higher. And in this case, you have your nice 10SI indicator that shows us relative strength above 0. That's excellent. We have other tools that we can use as well. If you go into a Heikin-Ashi plot, you can also see that you have a nice reversal here. We're looking for flat bottomed green candles. That is an indication of trend strength. And so we've got 1, 2 right here. Now we've got 3. Look at all of them that are stacking up. And now you've got your breakout here. Everything in very nice shape for you to take that position. And you can also see that we've got that as a search criteria, HA2, bullish on a daily basis. That would mean that there are 2 flat bottom green candles if we mark this. If I marked, I may not get any results if I mark this, but if I mark this, I would have 2 or more. So that would be 3 candles in a row. Let's click that or more and look at that. 1, 2, 3. Hey, and actually, this is not a bad looking chart right here. ACI. Did you see how easy that search was to run? I didn't know what I would find on this list, but you can see that the HA continuation too. plus, meaning it has more than two. If I just click HA2, it could be a reversal. It could be the beginning of a nice HA move higher, showing great trend strength. Sometimes you get a couple of flat green bottom candles, a doji, and then you get two more. So there could have been a small rest in there, a compression, and those compressions and those pauses will come up in this search. So will the reversals. But when I have two or more, I know that this stock has a full head of steam. So if I'm in on a stock like this, you can see 1, 2, 3, 4, 5, all through the 50-day moving average, bouncing off that 100-day moving average. And you've got a nice rally here. And starting there, you've got your flagpole, and now you have an upside breakout. So yes, this looks pretty decent, and you've got a nice horizontal resistance level that is support now. If you're picking the right stocks, your entry is much more obvious to you than if you are just simply locked into, I like Apple. Why do you like Apple? Because I like their phones and I just like Apple. We don't do fundamental analysis here because we're relatively short-term traders. When you focus more on technical analysis, your time frame is shorter. So we operate within a 1 month period of time. But it works great for stock trades if you're trading for, let's say, 2 or 3 weeks, which in my opinion is a pretty long period of time, or a month. Market conditions are so fluid these days that you see a lot of rotation in and out of sectors, in and out of stocks. I think that if you're going to be a very active investor, you really need to bring in your investment timeline. And when you do that, you can rely on technical analysis. Well, what does technical analysis do? How do we use it, and why is it so good? If I just look at price and volume, I know everything I need to know about a stock. And that's because I'll let all the big boys with billions and billions of dollars, I'll let their research teams do the analysis. And when their research teams tell them we need to buy stock ABC, I'm going to know about it because they're going to leave a trail of breadcrumbs for me to follow. And those breadcrumbs come in the form of technical analysis. That's why I rely so heavily on technical analysis. This type of price action here, this tells me the big boys are starting to sell stock. The big boys are reducing their market exposure. They're reducing their risk exposure. So I need to do the same thing. And let's take a look at Apple. Apple's one of the biggest tech names out there. And if I'm looking at an opportunity in Apple, where would I get in on Apple? This is a nice horizontal breakout right here through resistance. You can see it had good volume at the time. It had excellent relative strength. So you would enter the trade right there. Now, subsequently, Apple has not been a great stock to be in, and you've got to watch your upward sloping trend line. There's a nice one right there. And you can see how the stock broke down, and it broke below the 50-day moving average. That is a warning sign. If you are going to be picking a entry point for tech stocks, you can use a little bit of a top-down approach, and you can say, well, first of all, I need to know what the market's doing. Market's telling me I don't need to be in any stocks right now. But I can also take a look at what QQQ is doing, the NASDAQ 100. I want to buy these tech stocks because they have been beaten down. And you can see the market is at the 50-day moving average. Look at the QQQ below the 100-day moving average. It has been breaking down for quite a while. So you'll want to make sure that you have some nice horizontal support levels, 1, 2, 3. Now they become resistance, and you would need to at least get above that level. So I'm going to click GTC. I'm going to click on the top of this bar, which tends to line up with that price point pretty well. It's a little above it, which is good. I'd rather have it above it because then I know that that has been breached to the upside. What else might I do to enter the trade? I'm going to click on GTC, and I'm going to draw a downward alert line. And I'm going to click that bar right there, and I'm going to click that bar right there. So now I have this downward sloping trend line. I would like to buy tech stocks until this downward sloping trend line is broken, which when that happens, in Option Stalker, I'll get a nice big pop-up that'll say, hey, QQQ is through your downward sloping trend line. Awesome, perfect, fantastic. So then I know I should start taking a look at the market. Is the market, the S&P 500, has it been able to break through this downward sloping trend line? It's through that 50-day moving average. That's good, but I'd like to see it above this level before I start entering trades. Yes on S&P 500, let's say. Yes on QQQ. Hot diggity. I've got the market backdrop that I need to start thinking about entering some trades. So I bring up my custom search and I start looking for stocks that have relative strength. They have heavy volume. They've got some HA candles working in my favor. They have ADX. We have a proprietary trade signal that we can use. They've got all the magic ingredients for us to be successful with the trade. So let's go in and take a look at Apple, and I'll just show you what you could do. And it would not just be for Apple. Let's say that you really love Apple here and you think, my gosh, when all of this stuff blows over, Apple is going to be a great buy. I know it is. Well, first of all, you've got this 100-day moving average here. That would be the first thing that you'd want to make sure that that is broken to the upside. Click GTC. You've got a candle right there, the high of which is right at that 100-day, so you would mark that. And then you would come in and you would mark a nice downward sloping trend line. The key to trend lines is that the more points that you can capture, the more valid that line. If you captured that and that, it would come in just about here. So I'm going to try that and see if it's already been violated. The system will tell me it won't let me draw that line. But let's see what that yields. That's a pretty nice trend line. 1, 2, 3 touches almost there, almost another touch here. That's the trend line that you want to go with. So market good, QQQ good, Apple up above this line. That's my entry point, and that's how I find entry points. So again, just to repeat, Apple may not be the one that's got the relative strength. It may not be the stock that I want to be in longer term because it doesn't have the right technicals for me to get in. That's when I may lean on searches like this to tell me it's time to enter. These stocks will be excellent. And the search that I had earlier, I was looking specifically for strength versus the S&P 500. And let me bring that one back up again. And there you can see, and I also had ADX marked on a daily basis. I'm just going to click through this list because there aren't that many stocks. And you're going to see some great stocks. If the market were to rebound today, these would be the stocks that are going to lead the market higher. AXP, BAC, BNS, which you have to be a little bit careful with this because what happens, and please excuse the extra bar here, we're on the weekend, so we're updating our data. So you're going to see this is Friday, and that's also Friday, so the last bar is duped. But one thing I should caution you on is when you're looking for stocks in this search and the market's been down big, some stocks that are a flight to safety, they're known as defensive stocks. You'll see a rotation into those stocks. You may also see a particular sector that's really, really hot or a group that's hot. Don't ignore the group. Just ask yourself, is this rallying because the market is down big? So, for instance, like Kroger, a supermarket type store, it could do very well when the market's selling off hard because it's a consumer staple, very stable type of business. But as soon as the market rebounds, you're going to see a rotation back out of the stock. It's simply a place for asset managers to park money while there's a lot of danger and uncertainty and risk. So as you look at the list, make sure that it's not that type of situation. And if I go through here, I'm not seeing anything that comes up in here. Energy's been really hot, so we're going to see a lot of energy stocks in here, and that's because the price of oil's been going up, which is good. Energy you probably would want to have some exposure to. That's Discovery Channel. That's an energy stock right there. GE, click on that. Yeah, so these are all really decent looking plays. Murphy Oil, Occidental Petroleum, Charles Schwab, brokerage side. So that's what you do is you go through these searches. I'll put up a couple of other searches. You don't have to just run your own custom searches. You can also go in and use some of the canned searches that we have. Pop Bull is one of my favorite swing trading searches. And here's a really nice stock with a good breakout. Got our compression here. Earnings after the close on Thursday. That's why there's an A after the close. If it were a B, it would mean before the open. So this is after the close Thursday. Then you get your gap up Friday. And you can see how the stock was able to break out through this horizontal resistance and to maintain that price level after an earnings report on big volume. And the stock has had relative strength even before the market started to show signs of weakness. And again, this is why I keep the S&P 500 up in the background. Right here, I was able to compare what the stock did on a daily basis, compare what the S&P 500 had done. Well, long red candles, breaking support, nasty price action on the market. What's the stock doing? Compress, compress, compress. Is that good or bad? In this case, it's fantastic because as the market's selling off, this rally right in here, there would be all sorts of profit takers wanting to lock in profits on market weakness. When they see the market coming in, bam, 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 they would be nailing the heck out of this stock and it would pull back. And you would expect that. That wouldn't be unusual at all. 75% of all stocks follow the market. That would be normal price action. But when you don't see that and you see a compression, which incidentally, I'll click on 1.0 squeeze, and I'm sure we've got a compression going on here. Of course we do. You can see yellow dots equal price compression. A green dot would be a breakout through the compression to the upside. A red dot would be a breakdown through the compression on the downside. Compression right in here, breakdown to the downside, red dot. There's your compression, breakout to the upside, green dot. We've got all sorts of indicators to help us find these, and what's even better, we can search for stocks that are in a compression. We can search for stocks that broke through the compression in a bullish fashion or a bearish fashion. I've built all of this so that I could find stocks easily for my own trading. And I do offer my software to the public. That's what Option Stalker is. So in any event, GPS looks really good. I don't like the market here. So GPS goes on my wish list, and that's one that I might be considering. Bullish flag on a daily basis. Let's take a look at what we got here. Look at this. We've got a stock earnings right here after the close, stock sells off. Ooh, not good. They didn't like that number. Well, wait a minute. This stock has run from $16 up to $32 so far since November. It's up 100%. This stock has doubled. Do you think that good earnings might have been priced into the stock? Yes. So it pulled back, not because the number was bad, but because the stock got a little bit ahead of itself. But look what happens here when it comes down to the 50-day moving average. Nice long tail, long tail, long tail, and look at that relative strength right here. That's why it's on this search. This is a nice looking stock. During that market sell-off, it did not pull back at all. Overlay the S&P for a better visual. Look, the market's been down. This stock is compressing. ELY, it wants to go. So for someone who would be super aggressive and saying, I really like this stock, I'm glad he showed that to me, would you be buying it right here, given that the market is very vulnerable? I wouldn't. But the better strategy, instead of just buying the stock here, if you're looking to add it to your portfolio, you'd want to go down here and take a look at maybe the $26 puts. Sell a naked out of the money put. Go a little bit further out. Sell a $25 put. That puts you right at that breakout right there. And if you looked at this chart, you said the stock is here, it's been there, it's holding up well relative to the market. If I got a chance to buy way back here on this breakout, would I be interested? Yes. Well, if that's how you are looking at this trade, then you would go out to the March 19th expiration, or maybe you go out into April and say, hey, you know what? I want to buy this stock, but I want to buy it at a good price. And there you've got the $25 puts you can sell for 80 cents. If you don't know this strategy, you should learn this strategy, especially if you're a stock investor or stock trader. Now I can sell that $25 put, and if the stock stays above $25, I'm going to collect my consolation prize of 80 cents. If the stock does happen to drop, I don't own it at 25, I own it at $25 less 80 cents. I own it at $24.20. Well, that would be right on the 100-day moving average. A stock with this strength, is that a good entry? Yes. Well, when can I actually buy the stock? So the stock starts to drift higher, and now I just want to be long the stock. I don't want to make 80 cents. I want to make $2, $3, $4, $5 on the stock, and I want to buy the stock. What's the market doing? Is the market telling you it's time to be in? If the market starts to rally, we get the breakout here, then you come and look if the stock is able to maintain its relative strength. If the answer is yes, then you just need to get through a small technical resistance level like this one right here. Drop your alert line. Hey, market's looking good. It's through this point. I know I like this stock. It's through this little horizontal resistance level. It's had excellent support here. I want to be in this stock longer term. I'm going to draw a horizontal alert line here. I want to make sure that this support level holds. I'll have an alert. That'll tell me to exit if it starts to lose its relative strength, and the orange line goes below zero. That tells me that the stock is now weak relative to the market. Not good. But as long as the stock is strong relative to the market and it's getting through a technical resistance level, and now the stock starts to creep higher and higher and higher, wonderful. I can put my stop right at my entry price. And now I can't lose money on the trade. So that's how you need to approach your entries. The biggest mistake that I see is that people are absolutely oblivious to what the market is doing. They don't analyze the market, they don't keep up to date with what's going on technically. And when you start to get signs of trouble like this, they just go, oh, well, I'm in it for the long haul. Make all sorts of excuses not to take a loss if you happen to have a entry and you were starting to enter. And this happened to me. I saw this rebound right here. We had this pullback. We tested the 50-day moving average. Every time we had tested the lower end of this upward sloping trend line, the market had found really nice support. We had the stimulus bill coming up. That looked fantastic. I was like, okay, well, we stopped out on some positions here, and then we got this incredible rally right in here. I thought, well, we're going to go right through the high and we may have a buying climax. So I entered some positions in here as the market started to lose its upward momentum. I was a little concerned. We came down and tested again. This is a nice bar. This is a nice bar. So even up until about 8 days ago, I was still fine with our position. But then the price action that I saw, this was all negative. Testing, 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 testing. That same support now with greater frequency and long red candles consecutively. Uh-oh. I knew I had to take some lumps, go to the sidelines, but that's okay because it's been an unbelievable run. My gosh, we have made so much flippin' money during this part of the move. We'll get our normal pullback and our normal correction. We had the same thing happen back in February of 2020. We were on the sidelines in February. We were breaking technical support in the market, and the bottom fell out. What did we do? Last April, we were buying like mad. It was so easy to enter the trades there because you instantly had that cushion that I referenced earlier. So I hope that this video helps you with your entry points, and it's the same way for entering stocks that you really like. If the market's looking good, and the stock is looking good on a swing basis, then it's much easier to get into trades on a day trading basis. And we'll go back to Eli Lilly again, and we'll take a look at what it did on Friday. So you've got a very weak market open on Friday. So you should not be buying stocks. And I had mentioned to everyone in my comments on Friday, I said, listen, we've got a gap higher in the market, but after a huge day of selling, we're going to test the downside. So you get this downside support. Market starts to recover. Got a nice downward sloping trend line right here. I'll draw that in for you. There's your downward sloping trend line. Breach to the upside. Okay, this looks pretty good. Market looks good. Go into the 5-minute chart so we can get our market bearings. And same deal with the market. You had this downward sloping trend line right here. I had mentioned that long green candle right there. Excellent. I've got my breakout to the upside, long green candle. I'm on board with the market right now. I've got a stock that looks great on a swing trading basis. I've got a downward sloping trend line right here that it's been able to break through on the upside. I have relative strength in the stock. All systems go. Yes, this is a nice entry point for me. If you're a little bit more passive, and this is okay, you can also look at a breakout here to a new high of the day. You can also look at the prior day's high. That would also be something that you'd want to get through. So let's take a look at the prior day's high. And there you've got the prior day high right there. These are 15-minute bars. That was the high of the prior day. Yes, that would be a good entry point. Draw a line right there. Hey, we're through that high. I'll use that as my stop. Stock is strong relative to the market. Market moving higher. That's how you pick your entry points. Long green candles, consecutive long green candles, stacked one on top of the other, are always very, very bullish. And in this case, you've actually got a little bit of a gap, which makes it even better because you can see the close from that bar to the open of that bar is a tiny intraday gap. Very, very powerful and on good volume. You had that breakout on, well, you can't really see it in this chart, but decent volume. I hope this video has helped you. Entry points are super, super important to me because I feel that if I enter a trade really well, then it's much, much easier to manage. Thanks. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.